Welcome to another bit of due diligence on Palantir as I make my way to my 1,000 share goal. I'm currently sitting at 831 shares with an average cost basis of $22.15 per share. Now, while I'm a major Palantir bull, I still think it's important to pay attention to the bear arguments to see if they have any valid points, because I want to make sure that I'm not ignoring any new information that might change my fundamental thesis about the company. So in today's video, I'm briefly going to examine 3 bear arguments about the Palantir stock, and I'm either going to tell you whether it's total bullshit or whether the argument actually has some merit, and then I'll discuss what Palantir can and potentially is doing to mitigate the issues. First up is the perennial stock-based compensation argument. Bears like to say that stock-based compensation is diluting the existing shareholders, that it's dragging down the bottom line, and that it's killing the company. I'm even getting some comments on my other Palantir videos to that effect. To address this argument, I think it's first important to distinguish between employee stock-based compensation and executive stock-based compensation. Employee SBC is a very normal part of a healthy company, and I fully support Palantir having a generous stock-based compensation package for their employees, since they're developing new AI and new software technology at the very cutting edge of what's currently possible. They need to be offering their employees some stake, some skin in the game. And the only way to ensure that people stay loyal and that are truly invested in what they're doing is to offer them some type of piece of the pie. Now, when it comes to the executive stock-based compensation, this is something that a lot of bears like to harp on. But what we've seen over the past 12 to 16 months is the Palantir executive team cashing in on stock options that were written a very long time ago, and that is their reward for actually bringing the company public. We've already started to see that SBC taper off over the last few quarters, and the Palantir executive team has promised that we will continue to see that trend. So the amount of executive SBC is steadily decreasing. Anyways, when it comes to the bottom line, it's true that the stock-based compensation from the past year or so has prevented the company from actually being profitable. They're generating a positive gross profit, but once you account for stock-based compensation, they're not actually turning a net profit. But honestly, that doesn't really matter right now. If you're investing in Palantir, you're investing in it because you believe in it as a growth stock, not because you're expecting it to turn a profit now and to start paying out dividends to shareholders or something like that. So I don't find the argument that stock-based compensation is dragging down the bottom line to be that convincing, because at least for me personally, I'm investing in it because I'm expecting rapid revenue growth over the next 5 to 10 years, not because I'm expecting a profit today. And anyways, the company is already cash flow positive from operations and has a significant cash position, so it's really a non-issue. And if stock-based compensation is what's going to allow Palantir to develop a loyal and dedicated team, and that could potentially lead to better results in the future, I'm supportive, and I don't think it's as big an issue as the bears make it out to be. A second bear argument that I've seen a few people talking about is the fact that Palantir software is not accessible to investors or to your average person. That means that you and I likely have not seen the product, have not been able to experiment with it, and we have no first-hand knowledge of how it works. All we get on that front are the demo day videos that get posted online and maybe some testimonials from companies. Now, I have to say this argument is just pure bullshit. Granted, I do not have access to Palantir software, and so I cannot personally use it and confirm to you how good it is. But I don't have access to Oracle software either, or Salesforce, or any number of other companies. But that doesn't stop me from determining whether or not there's actually market demand for their product, or whether the customers like the product enough to keep coming back. Hint, in the case of Palantir, they do. The fact is, we have plenty of credible examples and testimonials from massive organizations that prove Palantir does exactly what it says it does. It doesn't matter what the industry or the sector is, Palantir software can recognize patterns in any data set and make recommendations to decision makers, and I don't need to have my own hands on the product to verify that this is true. The product is good. The third major bear argument that I want to address today is that Palantir won't be able to scale rapidly enough to justify its valuation. Large contracts are difficult to close, they take a lot of time, energy, and also resources, and so that's going to hamper Palantir when it comes to growing its revenue, and so the current valuation isn't justified. Now, this point has some merit and there's some nuggets of truth to it, but we need to unpack it a little bit. One of my main concerns about the future of Palantir is that the company won't be able to maintain revenue growth of 30% plus year over year for the next 5+ years. It is true that big contracts are harder to close and that client concentration is a risk for Palantir. Once signed, however, they have much less turnover, and after they've been renewed a couple of times, a client is pretty much hooked because the cost to switch to any other service provider would be enormous. Also, Palantir is taking steps to address the issue of scalability. They've hired hundreds of new employees over the past year, including many new salespeople. They've been increasing their marketing efforts in an effort to increase public understanding of what Palantir actually does and how it can bring efficiency to companies in any sector. And I believe that the confusion about what Palantir is and what it does has held them back a little bit in the past. Palantir has also launched many new products that are easier and faster to deploy. They've attacked some of the biggest fish in each industry, which could put pressure on other companies in those same industries over time, as Palantir software brings utility and efficiency gains, and the competitors of those massive companies may be left in the dust. So yes, while revenue scalability and client concentration are definitely risks, and Palantir bears are correct to point that out, I remain convinced that Palantir is taking the right steps to mitigate those risks, and also there's risk to pretty much everything. I have confidence that Palantir has been more or less sandbagging their revenue growth projections, and I believe that they'll continue to exceed those expectations as they have done for every single quarter since the company went public. So if you enjoyed this video and you want to see more due diligence on Palantir, as well as updates on my own personal investment in the company, then maybe you'll also like this video here or this one here. Thanks so much for watching. Please don't forget to subscribe to the channel and drop a like down below, and I'll see you in the next one.